All right, folks, welcome back. This is our midweek review for Wednesday, January 19th, 2022. All right, so I've had a very, very busy day today. I've been working with several students that have had some technical issues with their access to certain months, and it's older months. It's not like they can't get what they paid for, like in the 2021 group. These are older students, and I think maybe because of the migration to the larger server that we went to most recently, they may have had some issues with that. So I have a small list of people I still have to fix. So if you're one of those individuals, just know I'll be taking care of it tonight before I go to sleep. Hopefully no one else has any more issues, but it's mainly the older students, nothing from the 2021 group. But they're still customers, they're still students, they still have to get what they paid for. So as a result of all that, and I've been in front of the computer, and I did obviously the introduction video for the YouTube mentorship for those individuals that were not fortunate enough to be where you are here in this. I think I broke some hearts today. They saw a live account, and I have so much more for this year. I can't wait. It's going to be so much fun. So much fun. But anyway, we're looking at the dollar index, okay? And pretty much a lackluster day. It's not been doing a whole lot intraday for currencies. I mentioned Thursday, I like that day. So I think tomorrow we'll have a little bit more volatility in it. But I'm sticking with the narrative that we may have turned the corner here unless proven otherwise. We'll be looking for this run in here and then up into here, okay? But I'm still holding on to a bullish stance for dollar. All right, and the dollar index hourly chart. We have redelivered rebalance in here. This candle's high, this candle's low. Split that in the middle. We're essentially working in that area. I'm wanting to see it rally from here. We've already rebalanced this area here, so buy side rests here. All right, 15-minute time frame on the dollar index. This area here, if we have to go down one more time, watch this. This looks a little suspect to me. Otherwise, if it goes below that, it may need to touch back into this premium high of the old imbalance. So we'll see. Like I said, I'm instructing you to stand on the sidelines. Don't touch Forex right now. I know some of you and some of my older students are showing their consistency in the form. I'm not trying to encourage you to do something outside of your own model, but just, in my opinion, just dial back your frequency and your leverage, at least for the rest of the month, okay? And I'll just say that. Eurodollar daily chart. Okay, and we have a little bit of retracement back up in here. I mentioned that last night. Do we need to have a little bit of retracement before we go lower? I like the idea that we did this, and we'll see if it wants to roll over and attack sell side here. And then I still like that. I really want this line to be touched. I'm imposing my will, okay? I'm breaking one of the cardinal rules. ICT's imposing his will on Eurodollar. It's probably not going to go there now. Anyway, obviously I had a lot of work today, but I've also had a lot of fun. I could not wait to drop that video today on YouTube. But let me go into also a reminder. Since I'm going to be doing a teaching video on YouTube on Tuesdays and Thursdays, that's going to replace the video work I do here. Okay, so don't feel like I'm shortchanging you because you didn't get Tuesday and Thursday promised to you when you first signed up. But I have to be economical with my time, and you guys get the majority of it anyway. So Monday, Wednesday, and Friday, you'll still have that from me. But you'll find, I'm sure, that the model I'm going to teach there will be very complementary to what you have been learning here. Okay, and I'm keeping the index futures analysis there. Okay, so it won't be here in the mentorship. It'll be there for the time I'm doing that teaching. And then once I stop mentorship on YouTube, I'll bring back index futures here for the fall. And we'll be a little bit more active in the form, a little bit more outlined perspectives before it happens as well, because I'll have a lot more time to just throw a chart together. Boom, this is what I'm looking for, and then we can all watch it live. All right, so anyway, Eurodollar, I'm thinking it's going lower. And Eurodollar hourly chart, the old imbalance here, I think we've turned the corner here, maybe. I like the idea of what it's done here. If it can remain heavy and go after the sell side here, I like that. 15-minute time frame again, nothing really more detailed than I just showed on the hourly chart. Just prefer to see it go lower. But look at the price action here. It's just like sleeping. And this is why I'm trying to tell you, do not engage. Just sit still and relax, or otherwise follow the index futures, because they're moving, okay, which is, again, one of the benefits of being in the mentorship, because if we move from one asset class being active and then going kind of like quiet and stagnant, navigation from me will put your attention into the markets that should be moving, and indices are that. All right, and pound dollar, sell side imbalance, buy side inefficiency. We traded up into that, and we've still just worked off of that high. Haven't really made any kind of determination on what I think it may be reaching for. There's nothing in here I like as an ideal entry point or a draw. I mean, we closed in this imbalance here. Who knows? I mean, there's all kinds of stuff going on over in UK. You know, Boris, the guy, apparently got caught doing something, you know, being a part of a party or whatever. I was watching a video clip of everybody wearing masks like him and pretending to be drinking out in public or whatever. I tell you what, the media over in the UK, they tend not to pull punches. I mean, over here in the US, I mean, they lie and say everything is, you know, whatever the narrative is. The UK seems to be a little bit more punchier, and I love that. I absolutely love that. But we'll see. I don't think Boris is going to resign. They have too many agendas that's in play, and all you got to do is look at his daddy. He's a chip off the block. All right, so I don't know. Like I said, I don't know what British pound's going to do, and I'm being honest with you. So because I don't know, it's hands off. All right, and if we do get a dollar rally, okay, say it goes higher, this could wilt and attack the sell side here. That's the extent of what I see. And the reasons why I say that is we have a potential market maker sell model, consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, first stage distribution. This could be second stage redistribution, because we're inside this area where it accumulated on the buy side of the curve. On the right side of the curve, which is distribution, we're in that area again, and in this old imbalance. So I like the idea of it going lower, but I wouldn't touch it personally. I would not be in this pair. Even though I think it might be doing this, it doesn't feel so overwhelming, like a sense of one-sidedness. It feels like it's absolutely going to do it. The things that I described that makes high probability conditions high probability, it's just a speculation, and it's a guess. Okay, and that's an honest opinion being shared with you, so that way you do not put anything on with live funds, because I don't want you to be engaging right now. You should be really exercising patience. But I know some of you are more experienced, and I know that I have students in here that are doing well. I just have to be me and warn you that we aren't in those conditions that make it real easy. And the 15-minute time frame, not too much price action after the London rally. So we had New York session, reversal, and nothing in here really looks exciting. We have obvious relative equal lows in here with sell side with a fair value gap down there. But if it goes for that, it's just going to run through this, in my opinion. So it just looks heavy. It looks heavy, but I personally wouldn't touch it. All right, takes us to the discussion for tonight. Now, I know last week I stated that I was going to do a lesson on balanced price ranges, and I did not get the time to sit down and do the slides for it. And because of that, I'm going to throw in this because it was a complimentary commentary on what I shared on YouTube, so that way you get a better view of what they got. What they got was awesome, but here it's a little bit deeper, which is what I promised. I get to hold nothing back here. All right, so the hourly chart on the E-mini S&P March delivery contract, and again, the way you get this on TradingView is ESH2022, and you'll get this futures contract. Okay. On the hourly chart, we have a small little volume imbalance, and all of this here, these three candles, that is your bearish order block with a volume imbalance. Optimal trade entry, buy side liquidity resting here. So it rallies up into that, breaks hard, short-term low, broken here. So we have an hourly break in market structure on this swing low being broken. It creates an imbalance. Look real close, okay? You see this wick or tail, consequent encroachment, bingo, rallies up to that, turns the corner, breaks again, and attacks the sell side here. Now let's go into a little bit more refined view of that, okay? Here we have the 15-minute time frame. That same volume imbalance, price rallies up in London, rallies, pumps it up into a premium, the market breaks. Now we have a 15-minute time frame market structure break here and the imbalance. Now watch this. Okay, you see this tail? Split that in half as consequent encroachment. Look how it's being respected here. Look at that. Now, you're probably looking at this saying, well, why didn't you do that with this? Well, this is already acting as a bearish order block, so I don't need to look at that in any more detail. This is inside the range of that order block, so I want to kind of refine what this order block is already mapped out in terms of a PD array. A premium array high with this low, that's your bearish order block. So inside that range, we want to kind of like when we refine our levels, we go from a higher time frame down to a lower time frame. For instance, like an imbalance or a fair value gap. An imbalance or fair value gap on a 4-hour chart or 1-hour chart can be refined to a smaller little fair value gap on a 5 or 15-minute time frame. Well, that same mindset, I want you to think about that in reference to the order block here. So we have a bearish order block. It's keying off of a premium array and that volume imbalance there. Does it show a willingness to go lower? Yes, we have a break in market structure. Okay. Now, what has happened inside that bearish order block? Because if we have this tail, it can trade back up to the body. Okay, so if we're going to go back up into the body, that sets the stage for a return back to this much of the wick or tail in this candle. So consequent encroachment is in that range anyway, right? So we have an overlapping of premium arrays there. Look at the bodies respecting that. It's just beautiful. It's beautiful. So we completely close in the imbalance here. Sell side imbalance, buy side inefficiency. Comes back up and then spends time in here. So the lesson I'm going to give you tonight in lecture is a little bit more on time distortion, okay? And incorporating that with market maker sell model. That's what is going on here. Smart money reversal. First stage distribution. Second stage redistribution. Attack the sell side. Let's go in more detail. All right, we have a 5-minute chart. Our time window, 8:30 in the morning, New York time, to 4:15. This is the entire New York session for trading index. Okay, so index futures, this is your operating hours. You're going to be working with both the AM and PM session. Look closely. Okay, here's that return back up in. This line here is that candle's tail with the consequent encroachment, and this is that bearish order block. Okay, so we're seeing, look at the bodies. I mean, that's just, man, it's amazing. It's awesome. But now, show a different perspective because of the New York lunch. Okay, this chart is showing time distortion that is created by time charts. Time charts will always have these factors in. That's why some people like to make, I don't know, disparaging remarks about how using a time-based chart is useless. Well, that's because they don't know what I'm teaching you, okay? When you understand how to strip away the elements, like, for instance, if you grab an onion, okay, do you just cut an onion up with all the peel on the outside of it and skin? No. You take a layer or two of that off until you get to that wet level. And if you really, really want to get down to the sweet part of the onion, you go a little bit deeper and take some of the layers off. But if we peel this onion back from a time chart basis, you have to factor in certain elements like the dead periods of time. During the New York lunch, you have to be very, very careful because this is the time when the algorithm will generally go into consolidation. Now watch really, really close. This is the beginning of the lunch hour at 12 noon and ends here at 1 o'clock. So all these candles here inside this shaded area, that is a 1 hour time frame. Noon to 1 p.m. New York time. This is always New York local time. Now, sometimes when I talk about kill zones and Forex, I tell you I don't worry about the daylight savings time. When it comes to index futures trading, you absolutely must always use local time in New York. Okay, that's a caveat. Make sure you have that in your notes. Do not try to monkey around with the times. If I say 8:30 on this asset class, it's absolutely 8:30 in New York. Okay, and when I say 4:15, it's absolutely 4:15 in New York. Okay, don't move them around. Don't factor in daylight savings times or standard time. Just go with New York local time. Whenever you're trading Forex, then you can be a little creative when it comes to the kill zones, okay, and add an hour and make them a little bit more friendlier. In indices, you absolutely must do what I'm telling you here, and it must be operating under the New York local time. Now, with that said, look real close. Okay, the highest candle inside this lunch hour is here. That's it right there. So what happened in this entire hour? The market just range bound. So the only thing that's important to us is what's the highest range? That's this candle here. So after it creates that highest high until the end of the lunch hour, this is all dead time. It's irrelevant price action. It's not useless because if you're in the market, you got to be paying attention to it, right? But I'm teaching you not to trade during the lunch hours while you're developing. There are trades that you can take, obviously, during the lunch hour if you're expecting a market reversal profile. But you're too early in the game to learn that yet. So, we're starting to work our way into index futures and a little bit more detail-oriented perceptions of how we can navigate them. But this is a really, really important lesson for you today. And hopefully it'll help clear up some of the things that some of the students here have emailed me about. Can you talk more about time distortion? And whenever I talk about something, that's not a final thing. That's the reason why you've paid to be a charter member. So once your payments are done, you're learning more ongoing details because the market's going to give me opportunities for the teachings to be more intimate, more salient, more tangible to you. It'll mean more to you because you'll see examples and you'll understand why I'm doing things and looking for things to be as they are. So anyway, if we look at the highest range here, that's the only level that's important to me and should be the only one that's important to you. After that candle forms its high, you can take this candle out, 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 and this candle here. Completely take it out of your understanding of what this market's printing as a chart. Just ignore it. And I know that's hard to do because it's like, well, how can I ignore it? It's there, okay? But if you just give me the benefit of showing you what it looks like with it removed, okay? Because in my mind's eye, when I'm looking at this chart, when I was looking at this chart, when I was making that video today with TD Ameritrade's, which is really technically Charles Schwab, that's who they use and they're partnered with for futures trading. So if you open up a TD Ameritrade account, you have to ask for permission to trade Forex and futures. And the Forex clearing division for TD Ameritrade is Charles Schwab. So Charles Schwab is actually technically, I guess, the sub-broker partner or whatever you want to call it. I don't even know how that really worked out for them, but that's who's clearing my trades. Okay, so when I log into TD Ameritrade and I go to the trade platform for futures trader, the trades when I put them in, are actually going right on into Charles Schwab. Okay, so I don't know why I mentioned all that, but it is there now with no extra charge. But the reasons why I was outlining what I did today in that video and mapping out the optimal trade entry in here, that was on the basis of this market maker sell model. Okay, and it'll be more clear to you in a minute, but I'm drawing your attention into this area here because it has time distortion in the chart. So I'm going to take this candle here, this candle, this candle, this candle, that candle, and this long wicked tailed candle out of the chart. And I'm going to take this candle and overlay it with this one. Okay, I'm not so concerned about this tail, but I'm going to blend this body with this candle here, and then it'll look like all of this area here never printed. That's essentially how I'm internalizing the market. That's what the algorithm is doing. It's ignoring all of this. The only ranges that it's important to it is the highest high and the lowest low of that lunch hour. They're the only two levels, if you want to call it that the algorithm is even concerned about. It's not worrying about anything else. Okay. Now, again, this candle to this candle, all of this right here is going to go away, and I'm going to physically alter the chart by taking a screenshot of this, and then I'm going to cut this whole area out here and just slide it over to this candle here, and it's going to look like this. Take it away, all the lipstick, you have a chart like this, you screen capture it, okay? And you can do it with, I guess, like MS Paint, because that's what I did, okay? Once it looks like this, I'm going to take this candle, that one, this one, this one, and this one, and that one out. And it looks like that now. Now, doesn't that clean up that area and make it really easy to see the turn? Watch. It trades up into this old area on the buy side of the curve that set this rally. Now we run up to this area here. It becomes what? We're on the distribution cycle or sell side of the curve of this market maker sell model. Consolidation, accumulation, reaccumulation, smart money reversal. That down close candle, carry it through the curve. Now we're on the sell side. So it trades up into that range. This dotted line is that consequent encroachment that I had on the higher time frame. It's respecting those bodies there. You see that? But now also look, this candle here is the highest up close. Isn't that a rejection block? This candle here trades right into it. Now we have the rejection. That is your low risk sell. Now you might not see that and say, oh, I'm going to trade that. That's no problem. No big deal. But you can look at this bearish order block here and you can go short on that. So you have first stage distribution and then second stage distribution. Look at this displacement. You see that? Go through the curve, the highest point of the market maker sell model, go all the way to the buy side. See these down close candles? They were accumulating here longs. Now it becomes an inversion level over here with the sell side imbalance, buy side inefficiency at second stage distribution or redistribution rather. Smart money reversal, low risk sell, first stage distribution, market maker sell model. The biggest, nicest run's going to occur there. Unicorn trade, okay? This is the one you're hunting all the time. Sells off. Where's it go? Liquidity, okay? Now, if you look at the low, and for the life of me, I can't remember what the date was now. I had a date on the daily chart for S&P, but if you look at it on your daily chart for S&P, you'll see the low it was, it's reaching for. It hasn't really made it there yet. It's going to get there real close soon, probably. But all of this here, this high, this little retracement here, that's optimal trade entry inside of this candle's tail. And that's the one I mapped out in the recording live in that YouTube video I did today. And just drew their attention to here. Now this is a market maker sell model in and of itself. But that also is part of this larger market maker sell model. So it's fractal. Okay, same repeating general phenomenon, just on a smaller scale. Same thing occurring here. We have market maker sell model here. Back down to the liquidity. Here. Back down to the liquidity. Here. Back down to the liquidity. Okay. So The time distortion element is you want to go into the marketplace and strip away. Now, this is extreme what I'm doing here, but it may be beneficial for you to do examples of this, and it may not be easy for some of you. Maybe you aren't technically inclined. Maybe just you can't do this yourself, but you want to try to block out the candles that aren't useful, if it's a way of saying it. And let's again go up one more slide to see it. This is your highest candle. Okay, so this candle all the way to this one, this next one, you take it out, all of this price action here is irrelevant to me. So when I'm looking at this as ICT, as Inner Circle Trader looks at this chart live today, when I was looking at TradingView's live data, okay, everything, and in fact, I actually messed up by having a fair value gap on the 2-minute chart, which was really mapped out on a 1-minute chart. I didn't want to have that on the chart. And as I was looking at it, as I was talking, I was like, oh, well, I'm not going to draw any special attention to it. And it probably went right over everybody's head. But the point is, buying down in here, I was giving them the example of looking for a run here. But you know that trading up into that fair value gap, that would be the real objective. Okay, so there's going to be a strong distinction between what you learn as index trading here in mentorship versus what I teach on that YouTube channel. Okay, I haven't got anybody emailing me saying, oh, yeah, you're teaching mentorship. No, I'm teaching price action. I was teaching price action on YouTube before I started the mentorship. But I'm actually going to give them a couple little things that would have been gleaned from all the content on YouTube. Okay, and basically a lot of what the first 4 months of the content here, I already stated that if you would have really studied everything deeply in YouTube, you would have already taken the first 4 months of mentorship core content under your belt just from the free lessons. But I just consolidated it and put it in a way that it's straight to the point, brass tacks. Okay, I'm not going to go that far with like month 1 through 4, but I'm going to give them like elements to a trade setup. That's just it's basic. It's basic. That perspective. Now, I'm not trying to shoot it down and say, oh, they're getting garbage, because they're not getting garbage. I believe what they're going to learn and what they're going to get from me is useful. They can literally carve out an income with that. Do not look at what you see over there. It's so simple for you to adopt as your model. Don't look at that and say, well, I didn't pay for that. I have to find something in the mentorship teachings. If something I teach in the YouTube mentorship, if I'm teaching there and it really resonates with you, do not make a foolish move and say, no, this is beneath me. I paid for mentorship, so I need to learn only the things that ICT is doing in here. Okay, I'm going to hopefully bridge the chasm that's going to obviously be there between what I teach in index trading there and here. Okay, so it's going to complement, but I'm not obligated to these people. They didn't sacrifice like you did to be here. And I'm not trying to make them less than you or make you elevated above them, but I'm obligated to you. And I want to teach you because you trusted me, and I want to pour myself into all of you. But I still am a teacher at heart, and I feel bad for the folks that can't afford to be here. So I'm a teacher, and that's just the way it's going to be until I can't do it anymore. So I'm providing as much as I can within good taste and character. In other words, I'm not trying to give them what you have here, but I can teach a lot and not really overlap too much here. So just kind of like trust what I'm going to do over there isn't going to diminish the value you have here. If anything, you're going to see there's a stark contrast to what I'm teaching you here versus what I give out publicly. But what I'm giving out in publicly, I'm actually going to trade that with the TD Ameritrade count. And how are you going to argue with that? Today, I know every troll, every troll out there, or like, their only weapon, their only pitchfork and torch, ICT never trades with a live account. Well, there you go. That's one of the highest reputable brokers there is, TD Ameritrade. And they just watched it happen today. Oh, it's delicious. But I'm not done. This is going to be an amazing year. You're going to see it. So, looking at time distortion, okay? Removing this from your view, you don't physically have to take it out, okay? But when I look at the chart, I'm looking at this candle and I'm ignoring all this, and I'm getting to this candle right there. And I'm looking at this candle to this candle. Where are we at in terms of separation? This is the highest candle. This candle is inside of essentially this range. It does have a small little tail in it, but I could care less about it. Okay. So with this range, knowing that the low of that hour or lunch hour is an important range level as well, I would have a line on that. Okay, kind of like I do here. I would just extend that out in time without having any real reference to it to a specific candle. So the highest high and the lowest low, that range is important. That's your lunchtime hour range. And if I'm interested in going short, or if I think the market's bearish, I want to know what that range is, because it's going to probably revisit it. And this tail in this candle sees it here with the return back into this imbalance. Okay, so we have sell side here, tails, trade up into that, don't close it entirely, and then sells off. Bearish order block, this is the one I mapped out live during the recording. Extended out in time, shows you that was the range it should reach up into, and then sell off and attack that low right there. So I did not draw attention to this. I did not draw any kind of association with this market maker sell model, but that was the logic in mind. Okay, that was all part of it. This was first stage distribution. In here, second stage distribution, that's your unicorn. That's the point of understanding what I'm teaching you here. If you can look for these second stage redistributions in a bearish market when you're expecting the weekly range to expand lower, that's what mentorship is here. That if you could strip it down, or if I could rather strip it down to a sentence, like, what are you trying to teach me, ICT? What is it that I am trying to do? You're looking for the weekly range to expand either higher or lower. If you're expanding higher, that means you're going in with a bias for the week that you're looking for buys only. It's bullish. And you're looking for market maker buy models. Second stage reaccumulation. Now, if you're bearish on a market, you're expecting that weekly range to expand lower, so you're bearish. Then you're looking for market maker sell models, and specifically waiting for the second stage redistributions. And that is your one shot, one kill. That is your money trade. That's the one that you're looking for, the unicorn that you're hunting. Every single week, they're there. But you have to know all these things that build your understanding. And some of you probably are thinking, oh my goodness, it just happened. I had that epiphany. I got it now. I know exactly what I'm looking for now. I know exactly what he's been trying to teach me all this time. Why didn't he just say this before? I have said it, but you just don't have enough understanding to go through the process of leaning on all the logic that's required for you to understand this is even a market maker sell model. Why is this an area expected to turn? Because of this area right here. Why is this area expected to turn lower? Because it's over here. And we have an imbalance. And it's the second one after the smart money reversal. And here's the sell side liquidity. And it's in a bearish market. So, like I said, you're going to feel like you could have learned this sooner. As soon as it happens, you're like, oh, I could have learned this sooner if I just would have known that. And then when you start thinking about it a little bit more, you're like, yeah, that's silly. I needed to know this, that. And yeah, then reality hits you. Then it's understandable. And that's why you listen to some of the seasoned traders that do really well here. When they communicate to you and they say, you have to submit to this and it's going to happen for you, but you can't rush it. And it happened for me at this time. And some people it takes a little bit longer. Other people, it just happens sooner. I have no control over that. Okay. You can't speed it up. You can't, have any greater impact on it except for just doing the things I tell you to do and be consistent with it. The key is being consistent and not looking at these short-term speed bumps of your understanding or adversities. Like, I can't get it to work. I can't get it to work. The more you wrestle with the idea that you can't get it to work right now, the longer your learning curve is going to be. I promise you that it's a truism and there's no way around that. You just got to relax and just let it happen. And I know that's hard. I know that's very difficult, but I'd like to believe if I could go back in time and someone was telling me in the first 6 years it took me to figure out what I was expected to learn and be doing consistently before I found consistency. Remember what I said now. It took me 6 years to figure out what it is that I should be doing. Then I had to graduate in that to get experience. So in other words, I figured out my model year 6. Then I had to go through the learning curve of trusting it and figuring out what works and when it doesn't work, and all the subtle nuances that I give you here in mentorship. That was all post first 6 months of development. So a lot of you think, oh, I better have it by 6 years. I only discovered what it is for me as a model at 6 years. So 6 years of fumbling and floundering and blowing accounts, making money and feeling like I figured it out, and then blowing out again. That's what it was like. No one sat down with me and said, keep doing this and avoid doing that. I had to learn through pain. Okay? So a lot of people say God doesn't exist, but I can tell you right now, he's the only reason why I was able to maintain and keep doing it. So hopefully this has helped you in regards to time distortion. What can you do with it beyond the lunch hour and the futures indices? Periods after the London close until we get to Asia. That's time when you just take that completely out of the chart. Okay, that's why I tell you, go into the kill zones. What's the highest high and the lowest low in the kill zone? Okay, what's the opening price and the closing price of each kill zone? Because these are individual ranges, and if you treat them like Power 3, they will start communicating to you. And I just dropped something amazing in your lap. Huge study. Don't email me and say, what did you mean by that? And cut all the work out of it. It's for only the individuals here that want to dig into that. I promise, if you mind that, you're going to see something that's amazing. You ain't going to leap off the chart right away, but the more you study it, you'll start seeing things that I'm just not going to touch on YouTube. Okay? So just know that time distortion is a real thing in charts, but there's a way to filter that out, and it's all perception. Okay? And it's rule-based ideas, but it hinges around time. What's the first element of understanding precision? Time, then price. So if we strip away certain times of the day, remember before we went to electronic trading, or maybe some of you don't remember that and you're just too young. When we had open outcry trading, that means we had sessions where the market would not be trading at all. It would open and there would be gaps. And then it stops trading at that time. And the next day, who knows where it's going to open up. Okay. That was really cowboy West, Wild West type scenarios. It was fun, but it's scary too. When we went to electronic trading, it creates this sense of fluidity and continuous trading, but it's an illusion. Okay, because there's a lot of times that you don't want to be in the marketplace at all. And after, we'll just say it this way, noon to Asia's open, okay, in Forex, that's all dead time to me. Now, it's useful for all the standard deviations and such, but for trading, you don't want to be in there because all of that is backroom control at the algorithm level. You don't want to be in there because who knows what the central banks are doing in that time frame to set up all the standard deviations where they want them. If they're going to be manual interventions, they're going to want a certain level, and they're going to start monkeying around with that, and it's going to mess up the precision that you would expect if you were trading in those time periods. So that's an area of time distortion that you just simply erase from the chart when you're looking at it. Go right back into the previous kill zones. Okay, and if you look at just the kill zones and match them up and take all the data outside of that, just ignore it. Just ignore that. It cleans up the price action in such a way that you really can't appreciate it until you do it. And it's kind of like what I just did here. Okay, when we have this area here, and you strip it down to its core, look how pretty that is. It's beautiful how it just delivers it. The bodies stop right where they're supposed to, and then goes down. That's algorithmic. That's why I tell you there are things that you're not going to see in the charts because the charts are going to show you a lie. Okay? I can bridge certain things, but there's other things that aren't a way for me to show you because they're not chart oriented. Okay, they're mechanisms that are outside the scope of what charts are going to be able to show. Okay, it's I got to be careful what I'm saying, because just know that this is one of those things that I can teach, but also leans on the ideas that it's not in the chart, because the chart, before we clean it up like this, and with the logic I'm showing you how with this time distortion element, every trader around the world is looking at that right there. And you might look at this and say, what's the big deal? You're making a mountain out of a molehill, and it's just, what's the big deal? If you can't appreciate what's going on here, then, I don't know what to tell you. Because to me, it proves logic. It proves a way of stripping away all of the lies and manipulation that time-based charts present every trader that trusts them on the basis of classic retail logic. Steve Nielsen, candlestick people, supply and demand zone people. They're going to look at, supply and demand zones and build things inside that range, and it's not accurate. They're going to be led by a Judas theory. Every one of those sheep or lambs that follow the Judas goat, that Judas goat takes a left hand or right hand turn right before they all go into the slaughterhouse. They have no idea what's happening to them. They figure, well, momentum is we're following this goat, so just keep on walking. Then the goat moves along, and that gate closes behind him, but the sheep keep doing what? The momentum is go forward. We don't know where we're going. Just keep walking. That's what retail logic is. Okay, they're looking at what isn't accurate. It's a lie. They think they're safe going forward as a sheep following that Judas goat. He knows, he thinks he knows where he's going. So if he knows where he's going, let's follow him. And every retail trader that has their hopes and confidence in these things that they learn from retail, they're led astray because these charts are lying to them. And you get the extremes where they'll say, well, you got to use Heikin-Ashi chart, candlesticks, or Renko this, or, something, I don't even know, there's all kinds of other stuff out there. Ichimoku. Time-based charts are the best because I can teach you how to remove the noise. And that's powerful. And once you're able to do that, you have a perception and perspective that is kind of like X-ray. You look at the price action and you see it for really, like Neo. Remember the movie, The Matrix? At the end of the movie, he's zoned in now. He's like, you know what, I'm not going to be deceived anymore. I can see everything as it really is, and everything becomes binary. Everything's a 1 or a 0. And he sees the matrix as it really is. Well, how I'm teaching you how to look at price action, what I'm just showing you here, that's me showing you what the 1s and 0s in binary look like in a time-based chart. This is how the algorithm is internalizing, if it can be personified, it's internalizing the data like that. It sees it like this versus that, where it's, what's going on? Who knows? It takes you right to the core of what it should be expected to do. And why does it look different? Because this chart is designed to print whatever the market's doing during that candle's time. Time is the most important factor when you're looking at algorithmic theory, but you have to look at the time that makes the most sense, that's relevant. So if this is dead time, you have to take it out of your perspective, remove it, because it's going to be distortion there. It's going to be like when you drive in your car. You ever drive on a road trip? We got road trips planned in March. In case you didn't know, I won't be giving you any videos or any lessons. I know I got to keep doing it. It's going to drive you nuts because I want to make sure I've saturated everybody here and let them know. Just want to make sure everybody knows that I haven't gone missing or abducted. I'm vacationing in the entire month of March. But you ever do a road trip, you're driving, and it's a long trip, and you're listening to your favorite radio station in your local area. And as you're driving, all of a sudden you hear the song or the talk radio host that you were listening to in your local area channel starts slightly fading in and fading out. Then all of a sudden you start listening to something else. Like all of a sudden it's the mariachi band. Okay, you were just listening to Glenn Beck. Not that I listen to that guy, but you're listening to something, and all of a sudden, all of a sudden you're listening to a mariachi band or country music or another talk show host or whatever. And you're like, man, and you're fighting. It used to be like this where you had that dial. You would fight to try to get that to come back in. That was wasted time. You're not gonna make it come in any better, but you're getting distortion. That same element is viewed and seen in time-based charts. But if you know what the signal is going to broadcast on in the next area in advance that is the same genre, it's not a big deal. You know, once you start getting distortion, okay, you change the channel and then you go to another channel that either plays the same type of event or maybe even the entirely rebroadcast of that same talk show host. They're just broadcasting in their local area and you won't have that distortion. So that analogy, in my mind, works here for describing how you would have a real world example of how that's seen. Okay. Maybe it didn't work for you, but to me, it makes perfect sense. I'm sitting thinking to myself, it makes sense. I wish I would have learned it that way when I was coming up. But the point is this, when you look at it like this, it's clean. The price action is clean. It's pristine. It's so perfectly delivered. It makes sense. Versus that garbage. This area right here is sloppy, but it's not sloppy when you take that old distortion out and you focus on what's the heart of the matter here. What's the algorithm going to look at? How's it going to internalize that? That's what it's operating on. Those extra candles, they're just inside the range, high and low, of the lunch hour. So they're only marking whatever that price is during that one particular candle during a time when it's irrelevant. The highest high and the lowest low, that's it. It's all that matters. Okay? That's it. And then the rest is history, as you can see here. So hopefully this has dived a little bit deeper into time distortion and cleared up a little bit more of the confusion maybe you've had since I first introduced the idea. And also, obviously, you see the results of me outlining what was going to happen today in today's video. And it delivering like gangbusters. But I will do my best tomorrow to make sure I have the balanced price range lecture notes in tomorrow's video. And until I talk to you tomorrow, be safe.